Picture the AI world right now. Glowing server racks, Jensen in a leather jacket, GPUs stacked like gold bars. Everyone is all in. CEOs, investors, startups, all betting their future on artificial intelligence. And then there's Warren Buffett, sitting calmly with a Coke, looking almost bored. While the world chases the biggest tech mania of this generation, he's quietly hoarding $381 billion in cash. Buffett has watched every bubble of the last century: railroads, Nifty 50, dot-com, housing, crypto. And when a bubble forms, he always spots it before anyone else. In 1999, he warned the dot-com boom would end badly. People laughed. A year later, $5 trillion was gone. And today he's giving the AI boom the exact same look. Buffett says, "I don't understand AI, and that's the point." When asked about AI, Buffett didn't sugarcoat it. He said, "I don't understand AI at all." Most people heard humility. Investors should hear alarm bells. His rule is simple. If he can't explain how a company will make steady money in 10 years, he passes. With AI, no leader, not Sam Altman, not Sundar Pichai, can explain long-term profits confidently. Huge potential? Yes. Predictable profits? No. And Buffett only invests where the path is predictable. Are the AI numbers out of control? Now the part that matters, the money. McKinsey projects the world will spend $6.7 trillion on data centers by 2030, most for AI. JP Morgan says $5 trillion in AI capex is coming in the next 5 years alone. Citi estimates big tech will pour $2.8 trillion into AI by 2029. These are not startup numbers. These are rewiring the global economy numbers. But almost none of this spending is producing profitable AI products yet. From chatbots to co-pilots to assistants, most of them lose money per user. Why does Buffett avoid Nvidia? The center of the AI build-out is Nvidia. They dominate the GPU market, around 80 to 90% of AI chips. Their valuation soared to nearly $3 trillion, briefly the most valuable company on earth. And Berkshire Hathaway owns 0 Nvidia shares. Buffett doesn't hate Nvidia, he hates narratives that look perfect. In 1999, the Nvidia of that era was Cisco, the untouchable supplier of early internet hardware. Cisco didn't collapse, but its stock did and never truly recovered. Buffett has seen must-own tech stocks blow up before. Buffett repeatedly said, "AI has no moat." Buffett's favorite word is moat, a durable advantage competitors can't easily copy. AI right now is the opposite. Models leapfrog each other every few months. Open source versions catch up quickly, sometimes outperforming. Enterprises can switch from one AI provider to another overnight. There's no Coke formula, no Apple ecosystem, no Amex network. It's a knife fight with infinite competitors. Buffett doesn't invest in knife fights. He invests in toll booths. While everyone else bets on AI, he's building a war chest. Is he right? While the world throws money at AI, Buffett is piling up cash at a record pace. Berkshire now holds $381.7 billion in cash and equivalents. Most of it is in short-term US treasuries paying around 4 to 5%. That means he earns tens of billions a year doing nothing risky. People think he's afraid of AI. He isn't. He's afraid of overpaying. And right now, everything looks overpriced. Why is he holding so much cash right now? First, the market is dangerously concentrated in a handful of AI-driven mega caps. If any of them stumble, the entire index shakes. Second, a lot of AI expansion is debt-funded. That means higher interest costs and shrinking free cash flow. Third, expectations are unrealistic. AI is being treated like it will reshape every industry instantly. Fourth, physical limits are real. Power grids, water, chips, all stretched thin. Buffett is a realist. When the future requires perfection, he bets on imperfection. Buffett's AI bubble checklist. If you list out Buffett's bubble indicators, AI hits nearly all of them. Hype ahead of understanding? Check. Revenue lagging investment? Check. Everyone scared of missing out? Check. Business models unclear? Check. Single points of failure? Nvidia, TSMC? Check. .com had similar issues, just with fewer zeros. Swimming naked. Buffett's most famous line explains everything. You only find out who's swimming naked when the tide goes out. Right now, the tide is high. Money is flowing. AI announcements are everywhere. Shareholders are euphoric. But when the tide pulls back, we'll see who was never wearing a swimsuit. AI startups with no business model. Mega projects that never pay back. Companies that borrow billions for data centers that won't earn their cost. So what happens after the bubble? Buffett isn't betting against AI. He's betting against bubble pricing. And when valuations collapse, as they did in 2001 and 2008, that giant war chest becomes a shopping list. He'll buy the survivors. He always does. Goldman during the financial crisis, BNSF during recession, Apple long after the hype cooled. Buffett never misses the technology. He just waits for the illusion around it to collapse. So where does this leave us? AI will change the world, no question. But the investments flooding into AI right now, those are a bet on human perfection, in a world where humans repeat the same mistakes. Buffett's strategy is boring, slow, and painfully patient, but it's worked for 80 years, and he's betting it will work again, long after the AI hype settles into reality.